Hey guys, Prodigy here with Learn Option Trades, bringing you the first video out of his 3 course series video, and it's for beginners, aimed towards people more that maybe have not opened up a stock brokerage account like Robinhood or ThinkorSwim or TDA or anything of that nature. This is more towards people that want to understand more what is a stock market, and how can they get more educated in the stock market. And in this video, we'll be going over what does it mean when you buy a share? Maybe we heard friends say that they own a share of a company like Apple or Tesla, or they made money off of Doge, like a crypto coins and stuff like that. So we won't be going over crypto, but it's essentially kind of the same idea in a way. But anyways, let's get right into it. So the second topic will be, what is options? So there's other ways you can make money in the stock market other than just owning shares, and there's many other ways other than just options as well. But we won't be going into those because this is pretty much about options and shares, and the difference between buying option or shares. So those will be the first 3 topics that we'll be going over. And in this video, I'll be breaking down technical terms into simple terms. And the reason why I say that is because when you Google these terms up, or even Google what is an option contract or anything like that, or what is a stock market, it can sound a little confusing. So I'm here to bridge that gap for you and make it a lot more simpler for you. So here at Learn Option Trades, my plan is to teach you and educate you and making it real simple for somebody that, like, for a 5th grader to understand, because it really isn't that hard to understand stock option trading. It takes time and a lot of experience, I guess you could say, because once you learn it, after you learn it, it's all just going out there in the battlefield and just getting the experience and understanding, like, if this is something that you really want to do, or if this trade is worth the risk, or if this share is worth owning for the next couple years. So anyways, let's get right into it, and we'll talk more about that down the road. So like I said, this is the first video out of his 3 videos that I recommend to watch. I will be creating them. And so the first video is, what is a stock market? So let's get right into it. What is a stock market? And how can you make money in the stock market? How do people make money in the stock market? So in technical terms, when you Google it up, the stock market is an equity market. It's a place where you can buy, trade, and sell ownership of a company or a business. People are constantly buying and selling simultaneously, causing movements in the share price. So what that means is that we're going to use Apple for an example. So Apple, for an example, gives us the opportunity to own equity or shares into their company. So people like Apple, for an example, let's say they drop 300 billion shares into the stock market, and then I open up my phone, download a ThinkorSwim app or a Robinhood app, for an example, and I look at Apple price and I'm like, okay, they dropped 600 billion shares for $130 each for one share. So now I have the opportunity to own a piece of share of Apple because they listed them at $130 each. So I'm going to use my money that I have in the bank, open up account online, brokerage account, and then I'm going to go buy some paper assets, some of Apple. I'm going to go own a piece of equity, a piece of a share in Apple. I'm going to use my money and invest into their company. So that's the opportunity that they give into us. And the goal for that is so we invest in their company, we like their company, they're a strong company, and then years down the road, their value of their share price goes up in value. They have a couple good earnings reports, whatever the case is. That's just essentially what the whole idea and goal is for when you own a share, is that you want the value of the company to go up so that your share price goes up. And that's just how you expect to make money when you buy shares. Is, okay, you buy Apple at 130 and now it's trading at 150 or 160 or 180. Well, now you have the opportunity to sell your shares and sell out of your position and, collect the difference in the money that you would be making. Let's say, for a quick example, you buy Apple at $100. It's selling at $100. The next day market opens and now it's trading at $130, meaning you just made $30 on your $100 investment because you bought it in at $100 and now it's worth $130. So you don't make $130, you just make $30 because the difference between from when you got in your position, which was $100, now the value of that share price is now $130. So you can sell your whole position and collect your $30 gain. So that's pretty much just how that works for shares. Let's say the opposite happens. Let's say you buy Apple at 130 or $100 and it's down at $80. So obviously, sorry about that. Obviously, you're down your money now. Now your $100 turns into $80. So now, you're losing $20 on your investment. So that's something to keep in mind. That's how it works. That's just how it goes. You invest into a company. Not all the time is it going to go up. You kind of have to go look into the fundamentals, their balance sheet, see if they're actually a cash flowing company. And there's just a lot of fundamentals that go into actually picking the right stock. And if you look at the stock prices now, I mean, we're kind of all just coming down. So whether you buy into everything last year, you'd probably be pretty sad right now. So when you buy shares, you're kind of relying on the stock price to go up. So that's shares. So to keep it real simple, guys, hopefully that was real simple enough. Companies like Apple give us the opportunity to own shares, or they give us the opportunity to invest into their company. And that's how, we can possibly make money. We buy into their company. And if we like their company goals and we think that they actually, have the capability to make more money and actually become a successful business down the road 10 years from now, let's say they drop a car and then that car becomes so big that like Apple share price goes to $500, that's pretty much the goal for what you want to get into when you buy shares. Obviously that's super speculative and that's not going to happen. Apple does plan on dropping out a car. Who knows when that's going to happen? But stuff like that, you want to watch out for stuff like that. You want to be in the know for which company you're investing into and which one you want to be a part of. So anyways, that's shares. That's one example, and we used Apple for an example. Same thing with Tesla. They go public on the stock market exchange. And what I mean by public on the stock market exchange is that there's a stock market. So back in the 1920s, people had to go to Wall Street in Manhattan and, go talk to these brokerage people, which is Wall Street, and go fill out their positions and go try to buy into these companies that were either going up and down in price every day, all day. And so that's back then. This is 2022 now. We can do it all from our phones now. So I will be showing you, at least walking through a couple of different brokerages and showing you what it looks like towards the end of this video. But pretty much nowadays, 2022, we're in the future now from the 1920s. Now we can just go on our phones with the click of a button, instantly buy into a position, instantly sell out of a position whenever we want. That's the opportunities that we have nowadays. So that's really cool. No longer need to go down to some Manhattan and go talk to no, we can do it all through our phones. There's many different brokerages. Keep in mind though that too. Different brokerages have different fees and stuff like that. So, just look around, see which ones you like. I've personally used Robinhood before. Don't use it now. I've used TD Ameritrade. I don't use it now. But anyways, there's just many different brokerages that you can do all of these things, So, these companies list their shares on the public market for people like us, which is the public, to invest in. Before it goes public, it actually goes into a private market, which is more for accredited investors. And that's not something we're going to get into. But anyways, before it even gets into the public market, it actually goes through a private market first for big investors to get their hands or their feet wet first than us. So they actually have a better opportunity than us. And then it gets released on the public market for, let's say, for example, Tesla. Let's say they just drop, let's say it's December 12th, 2015, and they're going to say, hey, we're going to start dropping shares into the market. We're going to put 200 million shares into the market. So then they drop it into the market. Next week, they go hit up the SEC and go get a case going into where they can become public on the stock exchange, on the New York City Stock Exchange, because that's what we trade right here in the U.S. And it opens for me in my area at 6:30 a.m. If it's Eastern time, it's I believe it's at 9:30 a.m. But anyways, so Tesla comes out here, for an example, drops shares onto the public stock market exchange in New York City, one to be exact. And then people like us or me have the opportunity to buy and sell and trade their stocks. So that's pretty much what it is. It's just companies list their stocks on a public stock exchange, and we have the opportunity to buy into their company and invest into their company. And we take the risk of losing or gaining money when we own their shares. So anyways, that's shares and stock market. That's everything about that. So if I was to open up the stock market, or if I was to look at, actually we won't do that right now. We'll continue on before I even show you the stock market and we get into it and break all that down. So before we break all that down, let's get right into it. So that's shares and that's a stock market. So what else can you do in the stock market other than just buying shares? So like you, as you may know now, when you buy shares, if the price of the stock goes down, you lose money. Well, when it comes to option trading, you actually have the opportunity to make monies both ways, whether it goes up or down. So this is why I trade options, because I'm not always looking for the opportunity for the market to go up. I have the opportunity to actually make money if the market goes down as well. So what is options? When you look it up on Google, it is real technical. It can get real confusing, and that's why I'm here to break it down real easy for you. So if you look it up on Google, the technical complicated term and the technical way that they explain what an option contract is this. So actually, before we even get into the option contract, what is an option contract? So when you buy a piece of shares, you buy shares and you own those shares, and you're hoping that either the price of the money goes or the price of the shares go up in value so that you make money. So with option contracts, it's not a bet, but you can say, hey, I believe through my technical analysis and through all my fundamental research, I believe Apple is going to reach, is going to be $2, is going to be worth $2 more by next week, and that's an option contract. So you open up a contract and you pretty much electronically sign that, hey, I am pretty much confident. I am willing to put up my money and say, hey, Apple is willing to go to this, or Apple is going to go to this price by next week, and I'm willing to pay a premium for it. So that's pretty much what options is. And the technical way that they explain it is you're giving the buyer the right to purchase a stock or an asset at a specific price before a specific expiration. You have to buy an option contract which has a premium fee tied to it. So let's read that last sentence one more time. You buy an option contract, so you open up an option contract or buy one, and it has a premium fee tied to it. So the premium is what you pay for. So if you're saying, hey, I bet Apple's going to go to 150, 160, 170, that those numbers don't really matter. It's the premium. It's not that those numbers don't really matter. Those are the strike prices or the strike that you're choosing, but the premium is what you're looking for. So you're paying the premium on that contract. So when you open up a Apple contract and you say, hey, I bet it's going to go up $2 by next week, the premium, there's a fee to it. So it might be like $200 or $150 or even $80. The price can range, and there's a lot of variables that change the value of that contract. So in technical terms, really complicated ways, you're not giving the obligation to somebody. You're giving the right for somebody to say, hey, you can buy these shares from me. I'm actually opening up a contract, 100 of them. I'm opening up 100 shares in this contract, and I'm giving you the right to buy these at a specific price, at a specific expiration, because you're pretty much betting that's going to go to that price by that expiration. So it is a little bit complicated as far as that. So let's break it down. So let's take it a step back and break it down. Let's break it down. So in simple terms, you're placing a bet with an expiration date. That's pretty much what you're doing, but I don't like to call it a bet because it takes a lot of technical analysis. And when it comes to betting, in my opinion, if you just put money into a gamble machine and keep hitting that switch down, you never know when it's going to go in your favor. But as far as stock option goes and being technical with the price and understanding price action and volume and fundamentals, you can use the stock chart in your favor to understand where you believe it's going to go to next. So you have the opportunity to buy an option contract. And let's say you bet it's going to go down. You have the opportunity to make money if it's going to go down too. So if you think Apple's going to come down $2, you can say, hey, I bet it's going to come down $2 by next week or by tomorrow or by 2 months from now or 2 years from now. And you pay the premium. So you make money. You make money when the value of that contract goes up. And the reason why the value of the contract goes up is because you are correct. So let's say Apple is at 130 right now. Let's say Apple is at 130 right now, and you say, hey, I bet Apple's going to go to 135 by next week. So you open up this contract, and you're saying, in this contract, you're saying, hey, I bet Apple's going to go to 135, which is just $5 more from where it's at right now, by next week. So you open up this contract, and you see that the premium fee costs $200 to open up one of them. So you put up this $200 to open up one contract. Okay, Apple starts going in your favor. That same day that you buy that contract, let's say Apple goes up $1. Okay, now you're in profits, because the moment that it starts even going in your favor is the moment that you will start making money. And let's say it goes up to $3, $4. Let's say it doesn't even hit your price target that you said it was going to go to. Either way, you're still making money, because the value of that contract just went up in price, and it increased in value because it's closer to what you bet it was going to go to. And the expiration is not even close to the end of the date yet. So there's many different variables for how you can make money as far as option contracts go, and we'll go more into it in later videos. But let's say, for an example, you wanted to make a bet to the downside. Okay, Apple's trading at 130. You want to make a bet that Apple's going to go to 125 in 2 days. Let's say Apple actually goes the other way and goes to 132 first, so $2 above from when you originally got in. Now you're down 30 to 20 to 40% on your contract, meaning you open it up for $200. The premium was, the premium is different. So let's just say in this case, you open up this contract, you're saying, hey, I bet Apple's going to go down $5, and you pay a $200 premium. And so now you're in for $200, and then Apple actually starts to go the opposite way of what you bet it was going to go to. So your contract value goes down, meaning you start losing money on your investment, because it's not going in your favor. The bet that you placed, the contract that you open, is not going in your favor. But let's say you're still holding it out, and it has even, the expiration is not even close yet. It's not even close yet. So you still have a lot of time on your expiration. So you hold that contract due to you having strong technical analysis, due to you being more confident in it to actually go in your favor. And you're like, I'm not so scared of me losing a little bit of money right now just because it's not going in my favor. And let's say the next couple of days you hold it, and then boom, it finally drops it down, and it goes to your area that you bet it would go to. So then your contract would actually go back up in value, and then you'd be in profits at that point. So it does take a lot more technical analysis to become an option trader. It's not something that I recommend somebody just to look up some videos and go get at it tomorrow and be like, I'm an option trader. It's not something that can happen overnight. It actually does take quite a bit of experience, and it takes quite a bit of education. It's real simple though, I will be honest. It just takes, like I said, a lot of education and experience, because it's not something that you're going to contain in one day and be like, I can go out there tomorrow and do it. No, you're going to have to stick down and study a specific tool for a minute, and then next thing you know, go study another specific tool for a minute, and then add all those tools together to where you can finally become a successful day trader and start making money and understanding the market. So I do option trading. I like to make money when it goes both ways. If I see an opportunity for me to make money on the downside, I take a bet to the downside because I see it's in my favor. And if it doesn't go in my favor, or if it's not looking too good, I will cut it quick. I will take a quick loss before it gets bigger. So you want to have no emotions when it comes to trading. You can't have emotions tied to your money. You can't be, you can't have high emotions when you're losing money, or if, even when you're making money. It feels good to obviously make money, to be correct, to obviously make a good amount within a couple minutes, or whether it takes 30 minutes or a second. You just have to control your emotions, and it takes a lot of practice. So anyways, guys, that's options. The difference between shares and options is this. So when you buy shares, you lose money if the price decreases from the point that you bought the share or stock price at. So if you bought Apple at 130 and it's at 128, obviously, you're not, you're losing money on your investment. You got in at 130, it's at 128. You're $2 down from your original position. Options, you can make money both ways. But the thing with options is you have an expiration date, meaning that your option contract can go valueless, like worthless. It can go it can have no money if you hold it towards the very end of your contract date. So it does take a lot more, like I said, education, technical analysis, because anybody can buy a share of Apple right now. It doesn't take any real education to buy a share. But it definitely does take quite a bit of education to buy an option contract and to even know what's going on. And it's really not difficult. So anyways, shares have no expiration dates, which is something that's really good. You can buy a share of a company as long as that company is still alive and good, and the shares will be available. It's no release date. It's not like something can happen, unless the company goes bankrupt and they just disappear and they delist off of the stock market. And it happens, it does happen. So companies can go get effed and they can go bankrupt and get delisted, and your investment into their company is just gone. So that's the difference between buying and a share and buying a contract. So just to give a quick recap before we dive into the actual market and open up a couple different brokerages and actually check out the quick chart, just to show you what eventually you'll be learning one day. Before we get into all that stuff, I want to just do a quick recap. Sorry, I almost had a brain fart. I want to do a quick recap. So let's go back. So what is the stock market? It is a place where companies like Apple and Tesla give us the opportunity to own shares into their company. So they give us a lot of shares and they give us the opportunity to own shares in their company. And we can buy them, sell them, trade them, make money off it, lose money off it. That's shares. Same thing with options. You can lose money, you can make money. Difference is that it's practically bets and they have an expiration date. You can't hold these forever. You buy an expiration date, you buy a strike price that you bet it's gonna go to, and you're either it's gonna go in your favor or it's not gonna go in your favor. So it takes a lot of education. And those are the difference. So thank you for tuning into the first video of the course series. And like I said, real quick before you guys go, we're gonna actually go over some of the brokerages and open up some of the apps, just to show you guys what I'm working with myself, or just show you guys too what they look like. So first, we're actually going to open up the most beginner-friendly app ever, in my opinion, which is Robinhood. It looks like this with a green leaf. And I should have a video recording up on the screen. So Robinhood. You open up Robinhood and it has your portfolio amount in the middle. I don't have anything, obviously, because I don't even use Robinhood no more. I trade options and I don't buy shares no more. So you open up your Robinhood app, and it has a list of many different companies, from technology companies all the way to financial companies to banks to many different things. There's so many different companies, guys, to discover. There's a lot. I mean, there's just a lot. There's even crypto on here too, such as Bitcoin, Dogecoin, Ethereum, Matic. I mean, there's just quite a lot of different stuff you can invest in. Different paper assets is the real term for it. So let's just say we were going to go to look at this, technology. There's even cannabis stocks. So technology stocks like Apple, Microsoft, Google, Amazon, Nvidia. So there's just a whole bunch of different companies that you can invest into, different sectors like energy, pharmaceutical companies, growth and value, consumer goods companies, software companies. There's just so many different areas that you can invest in. If I was to look at ExxonMobil, it would just practically, this is what it looks like for if you're ready to buy a share and sell a share, or even, I have the option on mine to hit trade options, but we're not going to get into that because it's going to be too confusing for me to break down that stuff. But as far as, let's say I was just wanting to invest into a company real quick, and let's use Apple as an example because we always talk about Apple. Let's use Apple as an example. So you open up you search them in and you open up their stock. And you look at, so the first thing you would see is it says Apple, and it's currently at $150.88. That's to buy one share. You can buy one share of Apple for $150.88. You can scroll on down and see more information about that company, who's the CEO, when it was founded, news about it. So there's just a lot of information, and it says 76% of people are actually buying it, and only 17% of people or 7% of people are selling it. So there's just a lot of jam-packed information when you open up a stock. Same thing with Microsoft. You open up Microsoft, it's going to pop up a whole bunch of information about them. It's going to have information from not who's buying, but are there more people buying it than selling it? What are the financials behind it? The information. And there's just a lot of stuff. Earnings reports. There's a lot to go into it. So if I was to actually wanted to buy a piece of their company, it's $241.22 to buy one. So let's say I was to buy one. Um, it would cost me $241.22. If I was to buy 5 of them, that would cost me $1,260. So it's money that you invest in to them. So, anyways, this is Robinhood. I wanted to show you Robinhood real quick. Very beginner friendly app. Very simple and easy to navigate if you're a beginner and just want to look at stocks. Like just look at them. So that's Robinhood. Let's say I was to open up something else, which I think, I use ThinkorSwim. So this is my ThinkorSwim app. And same thing with ThinkorSwim. You can, let me actually go to Apple. So same thing with ThinkorSwim. Now this one's a little bit more confusing, and it can be. This is the one I use personally, but you see right up here at the top, it says buy, sell, and buy, sell. So I can buy a piece of Apple, and then, after I buy, I can sell it right away. So anyways, this is what it looks like when you open up. You see this is called a chart right here. You can see the history of what it's been trading at before. Apple used to trade at 175. It used to even be at 182.94 at one point. And when they first dropped, you can actually go all the way back in history and see that when they first dropped, which I don't know what year this is, but you can see that when they first dropped, it was under 13 cents, guys. Apple's now at 151 bucks. If you bought Apple at 13 cents back then, which this is before 1986, you would have a lot of money. So anyways, that's how that works. You can go back in history when you open up these charts and go on their stocks. You're going to see a graph. It's just the history of the price action, the history of what Apple used to fluctuate at. What's going on is what you're seeing is with these red and green bars is people buying and selling the stock. So like I said earlier, when you get into the stock market, it's just people simultaneously buying and selling the stock, like simultaneously, like constantly. There might be somebody that has 5,000 shares of Apples that they're selling, and then somebody else right after that might be buying 3 shares of Apple, and then another order might come in where somebody buying 10,000 shares of Apple. So it is just a constant battle back and forth, buying and selling. And so what I do in my case is I try to figure out, what is the next move going to be? Are buyers going to buy this up and take this up a couple cents to $1? And if so, should I take the risk on buying an option contract and taking on the risk of opening up a contract and making money if it goes in my favor? So that's what I do as an option trader. Now, if I was a shares trader, I would look at that, see who's here more, see who's more involved. Okay, buyers are here. More people are buying Apple today, so I'm going to buy some too and make money if the price goes up. So anyways, that is just how it works. That is the stock market. That is what we're doing every day. Every morning that I wake up at 6:30, or market opens at 6:30 a.m. I wake up earlier than that, but every day 6:30 a.m. market opens for me on my area, Washington, and I'm active. I'm ready to take trades. I'm here watching the market, using my technical analysis tools that I've got educated on. And I'm there at the market every day, just ready to take trades, make or lose money. The whole point is you do want to be more correct than wrong. You want to have more of a win percent ratio than losses. You want to have money management skills. It's something that you're going to have to learn. You're going to have to learn, if you put $500 into this trade, how much am I willing to risk to lose? How much am I willing to lose if it does not work in my favor? You don't want to have a buy and hope and pray strategy, because those are the people that get hit the worst. They buy into an option contract or shares hoping that it goes up, and they're just like, oh, it's down $10. It's okay. I hope it comes back. You don't want to have that. You want to be educated enough to where you know what's going on at this moment, and you know that, okay, it's not going to come back. It's showing many signs that sellers are here and they're not going to bring us back up. Or you get educated so much enough that you're like, okay, it dipped down a little bit, but by the way it's looking right now, buyers are stepping in and they're starting to come back up for to come back into my favor. And I'm willing to hold now because I'm seeing more of a confirmation that, hey, we're going to come back. So it's just a difference in your mentality and risk management, which is really major. So anyways, guys, I appreciate you guys tuning in. Sorry it was such a long video and it was a whole bunch of jam-packed information, one take video, but I hope you guys learned a lot from this. And let me make sure real quick that I recorded that. I did. Okay, so now that we're here, I mean, might as well just open up on my laptop Apple again. So this is Apple real quick. You can just see that it fluctuates. And what I mean by people buying and selling the stock simultaneously every day, all day, is just this. It's like, look at this. You can see Apple at one point was at 136.82. It gets bought up all the way to 143.14. I mean, if you were to get in on the opportunity on this and you knew it was gonna happen, I mean, you can make money on these areas. But anyways, that's that, guys. Appreciate you guys tuning in. This Prodigy here with Learn Option Trades. Appreciate you guys. And like I said, this is the first video out of its course series. The next video will be how to buy an option contract and how to understand the premium price that comes with the option contract. So buying a share is real simple. It literally has it when you open up Robinhood. You click buy, it tells you how much the share is. So when you buy an option contract, it's a little bit more complicated. A lot of numbers, and it's like, which one is the price? So we're gonna go over that in the next video, and appreciate you guys tuning in. Until next time, and join Learn Option Trades. And like I said, guys, the whole goal is to educate you on how you can become educated enough to where you can become a successful day trader without needing me around and seeing what I'm doing and seeing how I do what I do. You know, my goal is to teach you guys everything that I know, so that you guys will no longer need me. One really cool idea that I have is, we build a really big community with over a couple hundred people to even thousands of people, and we all make money together because we all together notice the same thing, and we're like, hey, look at Apple's about to take off. Let's all get in on this opportunity. And, you know, if we all see the same thing, it would be amazing. So anyways, appreciate you guys tuning in. Please help me and share my Discord, as well as share this video and send this to anybody that has any questions on stock trading. I'm willing to help, willing to be there, willing to show anybody anything, and I'm all ears. So appreciate you guys. Thank you guys for tuning in, and I'll catch you guys on the next video on how to buy an option contract and understand the premium price. So thank you guys. Peace out, man.